Hi, welcome to Trading with Rich. It's August 27th at 8:30 in the morning. The opening bell has rung, and we've got a few portfolio items that need to be taken a look at, and that we need to take a look at and possibly roll some calls. Not too much. It's a very light day today. So what I'm going to do is I'm going to go online here and show you the portfolios. We got a little bit of Xpeng, a few Neos, to roll up, and we're going to buy some RMO stock. We've purchased a lot in the past and it went down. We feel like we want to go ahead and call it dollar cost average. At least I'd like to get that while it's extremely cheap. I think it's good company. I think it's going to come back, but stocks are one of these things where you do your due diligence, study the trends, and hope things go the right way. Your strategy should be that you're going to keep these stocks for 3 to 5 years, and you're going to do calls and puts on those products that you know quite a bit about. So I'm going to pull up the Tastyworks accounts, and we're going to take a look at a few of the portfolios and go through it. One thing I will mention here is that when you're looking at my Alibaba stocks, I can't put calls on them right now. It's too risky. The Alibaba has fallen so much. It was at a high of a little over $300, and now it's down to 165. It had gotten down to 152. I think it's going to drop here as the market opens. It's going to drop a little bit, but once we get over this China scare, and we get over this, concern about China going into Taiwan, which they've been threatening to go into Taiwan for 30 years, but we're making a big to-do out of it now. I don't know why. We've got enough problems with the pandemic in Afghanistan. But anyway, we got Afghanistan going on. We got China going on. We got the pandemic with the variant D going on. It's been crushing for some of the stocks. And one of the best companies in the world is Alibaba, in my opinion. And it's not been pretty with that stock. Yeah, I think it's had a tremendous buy opportunity. I bought as much as I possibly could when it got down to $200 and less, and then it dropped even further. So waiting for it to come back up before I do calls. So a lot of the cash that I'm usually collecting from Alibaba is not happening this month, but we'll see. We'll see within the next 4 to 6 weeks whether it comes back, and if it does, things will be rosy. If it doesn't, we're just going to hold on to it and not do calls on it. So anyway, here we go. We're going to go into Tastyworks and take a look at the accounts. Okay, we're going to start out here with account 28. We've already taken a look at so the only one that we really have to work with is Xpeng in account 28, because we've already taken a look at Alibaba. We do have 5 calls coming off, but at $160, it's already dropped $5 this morning. I'm not going to make an adjustment there. We're going to leave it because it's got a call out there at 215. We're going to go ahead and let that clear out today at 330 and just finish off. There's no reason to even pay anything to get out of it. I want to see whether it bounces back later on this afternoon. Baidu, we've got the 3 calls at 165 on September 17th. It's at 154, so that's fine. We've got the call on September 17th at 25, and it's at 23.98, so that's fine right now. We don't have to worry about that till September 17th, but we'll monitor it in case it goes crazy. And looking at Neo, Neo has got 7 calls at 50. It's currently at $38, so that's fine also. And then we have the Xpeng. The Xpeng, I can get out of this obligation for $10.50, sitting out there at 48. Let's take a look over here and see how the market is doing today. Of course, we've got to be down on Alibaba. Boy, just getting crushed with that right now. Xpeng is up 9 cents. Neo is down 14 cents. Not a lot of differences there. See how Lee's doing. 23. Looks like Carnival's up 246, up to 47 cents now. Okay, all right. And Let's see what Romeo's doing. It's up 12 cents to 5.17. So we're going to buy some Romeo. We're trying to get it for 5.10, but we might not get it for that. It's running around about 5.17 right now. Maybe we can get it for about 5.15. But for now, let's go ahead and finish off looking at portfolio number 28. So let's go back to the positions and take a look here at the Xpeng. Cost $10 to get out of it. I got a 48 on it. I could wait till Monday and roll and collect the $10.50. I'm going to make $749 on this. Let's see what I would make if I went ahead and rolled it. If I rolled it, let's say to September 17th, I don't want to go out just 1 week. But if I was going to leave it at 48, there's a 96% chance that it'll be out of the money. So if you want to go down to about 90%, that'd be a 46. I don't feel comfortable with that because I think Xpev is going to take off. I don't know if it'll take off in 7 days, but let's take a look. Go out a little bit to let's go to September 17th, which is 21 days out. What would 80% be? That's kind of the 80% out of the money is where I like to be. Boy, that's still 46. I'm not real comfortable about that. I can make about 72 cents a share. Get out of it for a penny and make about 72 at 46. I just feel like Xpeng is going to jump up, so I'm going to stay with the 48. So I'm changing it. I'm going to go ahead and sell 7. So I have to highlight that. So I have 1 to sell now, 2, 3, 4, 5, 6, 7. So I'm going to buy out of 7 that is expiring today, August 27th. 0 days. So today it's expiring, and I'm going to make between 45 and 50 cents on this. So they're saying the middle ground would be about 46, because remember that'd be about 47 minus a penny or two would be 46, 45. Now they're saying 46 is the middle ground. So I can't let this go through on the 28th because today's the 27th and it's the last day that I can buy out the contract. So I need to change that to the 27th. Excuse me. And when I look and review at it, it says if you get out of this right now, you're going to earn $738. On your next round, you're going to make $322, which would be all the way out till September 17th. If I were to go ahead and move that to, let's say, 47, which I wouldn't have a big problem with that, what would the difference be? Now you're looking at about 59 cents. That'd be a $413 difference. So, you're looking at about a $90 increase in your call. But what if it blasts past 47 and goes to 48? That's what you're looking at. So I'm going to stay with the 48. Put it back in. I canceled it out. Didn't mean to do that. Stay out there with an 88% chance, but trust me, I've seen 88% get blown out of the water many times, and when I know the rhythm of this stock, it's slowly coming up, and it may break through and jump up to 48 by the time we get to September 17th. So we're going to roll with that. We're going to roll with 46 cents. Going to make sure it's set for today, and put it in for a $315 credit. Hit send, and we'll come back and see how our fish are doing. After a while, because right now it's saying it'll actually take it, the trade's at 45, the midpoint's 46. It may take or it may not take, but it's only $1. I'm going to go ahead and show you how you actually make this clear. So you can go back in and hit edit order and go right here and put it in at
even 44, and it would go through. So let's put it through at 44. And now I'm only going to make $308 instead of the $315. Because remember, there's 7 of them. And now let's see if it actually took. It didn't take. Not yet. So if I dropped it down $7 more, that would put it from 303 profit down to minus 7 would be what, 296. So if I put it at 43, and it keeps dropping down. I'm going to leave it at that. I'm going to let it sit for a while. All right. So we need to go and buy some Romeo on account number 34. And I'll show you how you buy that stock. So we've got Romeo here. And Romeo is, it took. We got it. And if we look, I had the order in at 510, and right now it's at 515. So what did I get it for? I'll go over here to the activity and take a look at the field. There's the Romeo. It went through at 510 and went through right at 930. 930 and 35 seconds. So I actually bought it at 510. It's already up to 515. So, and I bought 1,000 shares. So it cost $5,100 and up 5 cents. 1,000. So I'm already ahead $50. Yahoo. Go back to portfolio. I know we need to take a look at some Xpeng here. So the Xpeng has a August 27th, and I'll blow that up a little bit for you. Here's the Xpeng. We've got 10 calls coming due today. We're going to make $510 off this at 47. Quite a bit like what we just saw there with the Neo. Oh, excuse me, the Xpeng on the other portfolio. So if I want to get out of this, I'm going to end up making $495 if I get back 15 and go ahead and get out of this and roll it. So let's see what we can roll this for at 47. I'm once again not going to do it on next week, so I'm going to roll it out to the 17th and put 47 on it. Should still be the same, and it is. 47 and 86% out of the money. I kind of like that. I'm going to bring this back down for you so you can see what they're actually asking. It's going to cost a couple pennies. This is showing 53 cents. The reason why this is all out of whack is because I'm only selling 1, but I'm buying back 10. So if I bought back 10 at 2 cents, that'd be $20. And even if I bought it back at a penny, that's $10, and you take $10 from just 53, you get the 41. So if I go ahead and change this to where, hey, I'm going to go ahead and match it up. I'm going to do 10 for 10. I'll take that up to 10. Now you're going to see a difference over here on the price per share, and now it's showing 56. So if I go ahead and put that at 54, and that's my bid. They're asking 50. Actually, they're asking more than that. We'll pull this down a little bit. They're asking 58. No, it's not a big spread there. They're asking 58. Midpoint's 54. A lot of people are bidding 51, but they're not getting it. 54 is the mid. I think that sounds fair to me. 86% out of the money. Okay, let's review it again. We're going to roll the Xpeng. We've got 10 contracts out there. It'll pay back about a penny, between a penny and 2 pennies. We're going to make 53 to 58 on 10. We're going to buy back 10. We're going to sell another 10 for September 17th expiration date. And we're going to put it at 47. So 54 is the midpoint. Since this is expiring on the 27th, we can't leave this at the 28th because it'll already passed the expiration date to buy those out. So we're going to put it in here for the 27th. We're going to put it in for 54. going to be a 540, which is 54 times 10. And our last one we made $495. This time we're going to make 540. All looks good. We did change the date to August 27th, which is today, and we're going to go ahead and send the order. It's not going to take, I know it's not going to take at 54, but at least we get to take a look at it and see, what the offers are. So we'll leave it out there for a little bit and see if it, goes up and possibly, gets a 54. If we even go through the rest of the day and expires at 3:30 and we end up, keeping that $10, I won't be totally against that either. I don't think it took. Let's take a look. We're doing Xpeng, and there it is. It says the midpoint now is 53, and we offered 54. I think I will go back in and lower that. Now I'm going to lower it to 52. And to show you, it's still got the August 27th. I'm buying it back for 52. Buying it back for 1 to 2 cents, and I'm selling it for total of 52, so that's a $520 credit. I'm going to go ahead and send that through, and I'll bet it takes, because a lot of times when you go a penny under, it may not take, but sometimes 2 pennies under, it will take. You just got to kind of know the stocks and know, what the spreads are and how volatile that stock is and how much volume is out there, people buying these options. You definitely want to have at least 100,000 people buying options or selling the stocks on a given day. When I look at this volume up here on Xpeng, the volume is 1.45 million. There's a lot of people buying this stock. It has a really good take rate at 1.47 million. It's not even close to 100,000, so it should take fairly well. Let's go see if it went. And it did. It did. So we now have 20 out there on September 17th. We previously had 13. We added those 7. Now we're, we had 3. Now we added 7. We're up to 10 at 47. And we previously had 20 at 50. So I feel pretty comfortable with all those. There's no reason to go in there and make any more changes on that. We bought the RMO stock. Look at Nikola. I don't think we're doing anything with that. NEO. Take a look at that and see what our date is. It's the 17th. I got it in there at 50. So we're fine with that. On the Lee, we've got a September 17th. So we really don't have anything expiring today on August 27th. On JD, we got a $75 call. Look at that. It's already bounced up past that at 77. JD bounced up quick. So we'll wait until we get closer to the 17th because right now there's too much time value baked in there. Right now it's $2.40 over. Let's say even if it was $3, $3 times 700 is 2,100. Well, they want 3,100 to sell us out. Well, it's well over $1,000 in time value built in there. So we got to get closer to the 17th before we try to roll or get out of that position. But we've done real well with it. We should be ahead on JD, and basically we are. Look at the green down here, just a little bit ahead. But we were way behind on that just even last week, and now it's bounced back. So that's a good sign. Chronos got September 17th on 15, and what do we have the call out? We've got it at $7, and it's currently at $6.49. So we're fine with that. And then Carnival Cruise Lines, we've got the 10, and it's September 17th. We're going to make $390, but it would cost us $660 to get out of it right now. We don't want to pay anything to get out of it. We'll wait till the 17th. Right now, the stock's at $23.81, and we've got the call at $25. So that one's looking really good. Baidu, another September 17th. We got one at 165, another one at 160, and it's currently at 153. So we're fine with all that. We wouldn't want to buy out of that either. So we're not even close really to either one of them. But it costs so much more money to get out of it because of the time value that's built in, and we're way ahead on the stock anyway. we're going to end up making this 700 and this 450. We're going to end up making $1,150 on this, and just based on previous, we're going to end up making quite a bit. So anyway, we did what we wanted to do. We went in and did the RMO. We're going to watch RMO for a little bit. Look at that, 521. Hey, we got in at 510, and now it's already at 521. And we went ahead and bumped up our Xpeng. So the other account, which is similar, we'll take a look at it on the 30, and Aurora Cannabis is September 3rd. We got an $8 call on a $7 stock. Fine with that. Alibaba, we know we're not doing anything with that. Baidu, we got a 150, which is a 153, so it's already passed, but 600 shares at say $4 is $2,400. They want 5,000 to get out of it. Well, that's time value. So time value will drop very fast as we get closer to September 17th. And I'll show you that next week when we get into September 3rd and then 10th and then the 17th. You'll see that we're not going to pay $5,000 to get out of this. That's not the way this works. But if you get frightened and you're worried that you're in a bad position on it, then you can lose a lot of money through time value. So you need to know what you're doing when it comes to time value and risk management. That's what this whole strategy is all about. I don't want to. I'd rather be at 160, but I did put the other one at 165, and it's still, they want 1,300 to get out of the obligation. I'm making 1,100 off it, but they want to take all of it and a couple $100 more to get out of it right now because of the time value. Well, I think I'll hang in there. It's 153, and I got a call at 165. We'll be fine. When I add up the stocks over here to see if I got them all covered, 6 and 4 is 10, and 2 is 12, and we got 6 and 6 there. So at the very worst, I'll just take this 6 and I'll put it against this when we get closer to the day. Let's say it finishes at 154. That'd be 6 times $4. That's what when the time value evaporates. That's $2,400. And let's just say it stayed right where it is right now. I'm $5,000 ahead on the stock, so I'll let the stock go for $5,000 and take the $2,400 off. Not a problem. But if it ends up being 150, this over here is going to go down. So really, at this point, it's a moot point. I just need to wait until September 17th and then make a decision on whether I buy the stock back, get out of the obligation, or whether I let the stock go. On this one here, 165, I'm just going to go ahead and make the money. So how much could I have made on the calls? I could have made, if they stayed below 150, I would have made $2,900. 1174 plus 1,800, that's $2,974. So that's what I could have made if it stayed under 150. But I do like every now and then going over the call price because it actually raises the price of the stock. So that's a rich man's problem when you go past your call because you made too much money. Not a problem in my book. So anyway, I'd say Baidu's okay for a while. We got to watch that. Carnival Cruise Lines got a September 10th. We got a 25 call in there at 23.84. We're still ahead on the actual stocks. So I'm going to go ahead and let that go. If I wanted to get out of it right now, I'd make $308, but I have to pay $212 to get out of the obligation. So I'm not going to do that. And then I've got a September 17th in the same scenario. And I've got 300 shares of stocks there, and I have 500 there. The 300 is up 480, and the 500 are up 302. So we're looking fine on that. Chronos, I usually buy my calls on Mondays. Sometimes I'll do them on Fridays, but at this point, I'm not sure which way Chronos is going to be going, so I'm going to let that go. Let's take a look again at the grid. It's my watch list. How's Chronos doing? It's got to be up just a little bit. And it's up 6 cents. So we'll let that go ahead and go. What's Xpeng up? Xpeng's up 14 cents. Okay. Go back to portfolios. Take a look at JD. JD is a September call. I got actually a put. So I got a put in there at 65 and some insurance at 63. It did jump. It jumped big time up to 77. So that made my put extremely profitable. So I'm going to make $800 on this put contract. And if I wanted to get out of it, it'd be the 230 minus the 70. I can get out for about 60 bucks. I've got till September 10th to make this decision. I may go ahead and sell out on Monday, but if I wanted to go ahead and not pay back 60 bucks, I can put a contract in there and say, hey, I'm going to close these two, but I'm going to offer, instead of $6, I'm going to offer $2. So I'll put it down to 2. And this is September 10th contract. I'll leave it out there till about, September 6th sounds good. We'll leave it at September 6th. The midpoint's a 9 cent, and I'm going to go ahead and just put 2 in there. Actually, I'll put 3. So $30 credit. Something's wrong. Something is really wrong. So anyway, I'm missing something here. So what am I missing? Why don't you? Yeah, there we go. 10 and 10. I didn't have them covered properly. But anyway, that's how you do it. I'm not going to put anything on it right now. Lee, September 17th with a 33 call on a 29 stock. Neo, September 17th is the next expiration date. We've got it set at 50 on a 37. And Romeo, we've got it set at 7. We don't have any calls on it right now because we're trying to watch it go back up again and not put any calls on it. And then Xpeng, we do have it set at 50 on 13 of them, and then we have another 48 at 16. It's still $40. I'm going to go ahead and do a 48 and a 47. So let's go ahead and roll this one and go 48 on this one for. And every now and then they don't do the rolls properly with Tastyworks. You got to hit it again. Now it comes up. You got some numbers to work with. So they're asking about 4 cents to get out of this today. If I was going to just roll it 1 week, it almost break even. I'm not going to do that. I'm going to go ahead and put it out the 17th. And let's say we put this at 48. And I have, 13 there. I'm going to sell 13 of them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. All right, so they're asking for, so they're saying 45 is about the mid-even point there. I'd have to agree with that. We'll leave it at 27. It's not going to take immediately. I'm going to leave it in there and let it sit for the day and see if I can get this part to evaporate a little bit more. This should go down a couple cents. And then at that point, I should be able to make my 45. But you're going to see this isn't going to take right away. I'm going to make $1,000 profit from the last transaction, and this one's going to be a $585 profit if I end up staying under $48. So we'll leave it at that. I'm going to go ahead and send the order, and it says your order has been placed. And when I take a look at that, it'll be down here at the bottom. No, it's not. It took. So I got the full 45. Look at that, 611, 611. I got it for exactly what the going price was. That doesn't happen too often. Normally you end up being like $5 or $10 down. Every now and then you might end up being $10 up. You hardly ever end up with a zero. So that's good. If we make it to September 17th below 48 on this stock that's currently at 40, we'll make $611 on it. If I want to get out of the contract, I could get out of it right now for $611. So let's go take care of the other one, which is the one we had at 48. We're going to take this down to 47 on our roll. And look at that. I'm going to clear $1,900 on this one. With an $8 payback, that's going to be $19.44 profit. So that's good. It's good. So I'm going to go ahead and roll that. And they're only asking a penny because they don't think it's going to hit the 58. And I'm going to go ahead and not do this for September 3rd. I'm going to put it out there at September 17th. A lot of times what I'll do is I'll bounce between the 3rd, the 10th, the 17th, and kind of look at the out of the money. And the one thing I do try to do is keep it right about 80%. Right now it's saying 80% would be 46. I don't like 46. I think that's too close. I'm going to go ahead and take it to 47. Okay, so we've got it currently at 48 going through on August 27th. So we got to buy out of it today, and it's going to cost us about a penny, which a penny times 100 shares of stock is $1. And since there's 16 of them, it would cost us about $16 to get out of this. And at 85% out of the money, that's what OTM means, out of the money, we can make between 58 and 65. So I really don't know why that's set at 54, but I'm going to go ahead and set it, I'm going to set it at about 60. And I'm going to change it to today's date. If it doesn't go through, then I'll go ahead and buy this on Monday, because I know it's not going to hit 48 today. It's currently at $40.87. So we'll go ahead and roll that through. $60 credit is not right, and this is the reason why. I only sold one, but I bought back 16. I don't want to do that. I'll go back out, we'll edit the order. That needs to be 16. Should have realized that when I saw that 54 over there. They're asking 61. I'm going to go ahead and put 60 out there with today's date on it because this contract is expiring today. And my profit's going to be $960 if it stays at 47 or below. Go ahead and send that. I'd be surprised if it took, but I got surprised on the last one. This time it didn't take, so it's currently at 60. I'm going to go ahead and play the numbers game here and run it down to 59. See if it takes at 59. It probably won't. It normally needs to be about 2 cents under what the mid is for this particular stock. Even though there's a lot of volume out there. Look at the volume now. It's up to 198 million. Remember, just a few minutes ago it was 1.45 million. Now it's at 1.98 million. A lot of people trading Xpeng, and it has not taken. So I'll put it at 58. Very, very good chance that this will go ahead and go through. And it probably already did. So it looks like it went through at the higher number. So when I look at it, I've got 13 out there at 48, and I've got the 16 at 47. And yeah, now I'm down. That's normal. When you hardly ever hit those zeros like I showed you in that last one, you're usually down about $6. That doesn't bother me. It's very hard to go fishing, and I've done it. I've spent hours trying to collect an extra dollar, by getting an extra penny out of something, and per share times 100 and trying to get $1. I'll go ahead and let it go, and between these two on September 17th, if all goes well, I'll make $960 plus $611. That'll be $1,571, and I want to make sure I have everything covered. I've got 29 calls, and how many stocks do I have? 5, 7, 11, 16, 22, 29. So covered just fine. So that one is done. And hey, Baba came back up. It was down to 159. Now it's back to 160. That one's killing me. Got to see that thing get back up to 200. Okay, so those are the basic portfolios that we need to look at. I've got two more. I got to go look at that.
Okay, truth in advertising here. Right when I was showing you that I was going to be going into the 95 account and the 91 account just to clean up a few small things, I dropped the camera. All right, hey, I'm not a professional cameraman here, but I had the camera behind the computer, and it tipped over. But anyway, long story short here, there weren't too many adjustments to be made. You had to go ahead and adjust some Xpings that were closing. We didn't have to do that because none of them were even close. We could have let them expire at 3:30 here on Friday, and I would have just went and covered them on Monday and done another call. But I decided, since they were so cheap to get out of, we were so far away from the strike price on this date of the expiration date, that why not just go ahead and roll it, pay the $1, and get an extra 3 days, get the rest of Friday, get Saturday and Sunday, collect a little more premium because you've collected an extra 3 days. I put them out to September 17th. I feel pretty comfortable because my out of the money numbers, especially on the XP, were right about 86%, and that means that according to the algorithms and the way that this stock has been acting in the past, we should feel fairly comfortable that we'll be under 80, have an 86% chance that we will be out of the money and we'll collect 100% of the premium. That's the name of the game. Collect as much premium as you can, and if you do go over, you made a profit all the way up to that amount, up to $47 or $48. You made a profit. It was at $40 now. But if you go over 48, then you either sell your stock at $48 to that person, or you go ahead and buy back whatever the amount was when you get to the expiration date. So let's say it finishes at 50, and I said I would sell it to him at 48. I can sell it to him at 48, and I lose $2 a share. Opportunity, so that's a rich man's problem. I went ahead and put a ceiling on how much I could make when I do a call. But based on my history, I'm running about 95 to 98%. It depends on which months I run. Sometimes I run a quarter, and the last quarter I was sitting at 95, which is a little worse than I normally do. The first quarter of this year, I ran 98. And actually, for the first 2 months, I was 100% not having to pay anything back, which is very unusual. The pontiffs say that as long as you can end up, scoring somewhere over 70% of the time you're not paying anything back, then you're doing well. Well, that also depends on how badly you went over. I like to look at the dollars. So when I look at the dollars and I run my tax reports, and thank goodness Tastyworks runs some fantastic tax reports that you can calculate every day if you wanted to. I'm way ahead of the game. I'm going to end up paying a lot of taxes this year, and I have no issue with paying taxes as long as I'm making money. So this is Trading with Rich. It's August 27th. I'm going to go back in and clean up a couple of my other portfolios. They just have a couple small things that need to be taken care of. And then I'm going to call it a day because I've already rolled all the Xpeng and Neo. I bought the Romeo. I checked all the Chronos and the Aurora cannabis stocks, the marijuana stocks, and the Carnival's doing fine. The Alibaba, we're just going to let that sit and wait for it to come back up. We're not going to put any calls out there. We're just going to watch the stock and let it go up. So this is kind of the doldrums of August, and there's an awful lot going on in the market right now with Afghanistan, the Taliban taking over Afghanistan, and then you've got the Chinese. There's a lot of finger pointing going on there. They're making a big deal out of the Chinese government telling the internet companies that you can't sell people's personal information. That should be a rule everywhere. It is a rule in Europe, but over here in the United States, I think some of our companies would go broke if they couldn't sell everybody's information. And that's why you get so many emails, and as soon as you start looking at sunglasses on Amazon, next thing you know, you're getting 15 ads from everybody else about sunglasses. They're selling your information. They're making a lot of money off that. But it's your time. They're wasting it. And China's saying they're not going to put up with that over there. And we don't like that. We don't like government going in there telling people what to do. Like the United States and the way we've been handling this pandemic, was a pretty good example of people telling us what to do. Even though a lot of it is good advice, it's still, it's not our choice in some cases. They shut down the movie. Anyway, this is Trading with Rich. I hate it when I get a phone call in the middle of this thing. But that is a telemarketer. I will cut this out. They automatically called right back. Okay, so this is Trading with Rich, August 27th. We went ahead and did a portfolio review. I'll be back on September 3rd. Have a great week. Have a great week.